Live from the NASDAQ market site overlooking New York's Times Square, this is Fast Money. I'm Brian Sullivan, in again for Melissa. Your traders around the desk tonight are Tim Seymour, Jeff Mills, Nathan and Guy Adami. Tonight on Fast, stop us if you've heard this before. The market's another round of all-time highs, but not every stock is taking part in the record rally. We've got some names that focus around the consumer and maybe dying to play catch-up. Maybe ways for you to make money. Plus, you'll hear exclusively from the CEO of BNP Paribas USA. You think that environmentally conscious investing is just a marketing fad? Think again. How about tying how much money you owe on debt to how environmental you are? It is happening with big companies, and we'll talk about it later on. We're about to kick off a big week for earnings, Netflix, Intel, many more. We're going to break down how the options market is setting you up for that week ahead. All right, happy Friday, everybody. We're going to start, though, with today's big number, and it was a big number. Housing starts surging 16.9% last month. That is the best monthly print in more than a decade. The news sending the home construction ETF, the ITB, to its highest level in more than 18 years. Guy Adami,
yes, sir.
If you build it, will they come?
Well, Ray Kinsella notwithstanding, Tim. Yes, you follow me, right? Thank you.
Yeah, well, I'm here.
All right, Dan is. Look, it's 9 seconds in the show and Dan's already done. We're already tuned out.
You got a little shoeless Joe to you, you know.
With that said, I mean, yes, the housing numbers have been great. There's no denying that. How do you play the housing numbers? And this is something we've said for a while, since before Mr. Buffett had a stake in this company. Restoration Hardware, it's been on a tear. It has pulled back recently. Look at two different things. One, Mr. Buffett's in the name. Two, valuation isn't ridiculous. This trades at 16 times next year's numbers. You'd think it'd be a lot more, and I'll give you a bonus. Merchandise inventories last quarter were down 24% on very strong sales growth. You know what that means, Brian? What, Guy? It means their margin is going to be even better next quarter. So RH, in my opinion, is the way you play this.
Well, I think it's Home Depot, and I think it's the home improvement stores, because while people are building new homes, the real trade is the fact that most people can't afford new homes, and most people are actually staying in their home. Interest rates are going to at least stay reasonably low on a relative basis, and people have jobs. The easiest thing to do is actually fix up your house. I think when you're talking about Home Depot, and I did a power pitch on this a few weeks ago, ultimately, I think this is a stock that has a lot of sober news. An outlet from Investor Day that really talked about margin pressure, talked about shrinkage in their inventory, some things that the management team, despite making major investments in innovations in technology, you know, people are waiting for the next move. It's a stock that, after outperforming the S&P by 3 times over the last decade, it's actually been something that's really kind of lagged. I like Home Depot here. I think it's one of the great management teams out there. And that, to me, is the best exposure to the housing market.
Okay, two more things. I said if you build it, they'll come, Jeff, for a reason. Because just because people are building homes doesn't mean they're going to have a buyer. And you do wonder if the home builders could be exposed here a little bit if they're building all these homes, getting a little irrationally exuberant in the housing market. To Tim's point, you got $5,000 in the bank. You know, it's harder to get a loan. I'm just wondering if the home builders could be. It's not all good news for the home builders.
Well,
I don't know.
I think you can play the number via the home builders. You know, they were overbought. They consolidated for about 3 months. So I think as a sector, they still look okay. But to your point, one of the things that I think can still be a tailwind is affordability. So if you look at the average home price relative to disposable income, that continues to get better and looks good for the home builders. But one of the things is all of that demand has been concentrated at the lower end. So when I'm thinking about names that I would want to play in that area, I think about a D.R. Horton, for example, where they've shifted their product mix to a little bit to the lower end. So I think looking in that area, you know, you could play the actual home builders for a company that's focused in an area where the demand actually is.
Right. So if you see that the home sales data, to your point, you know, it's one thing to be built, but the sales is important. So if you see that as a trend that keeps going in 2020, I suspect, you know, this is a name that obviously was put in the penalty box a long time ago, Wells Fargo. You saw those results this week. At some point, this one, you know, new CEO, a lot of people were saying they kitchen sink the quarter. It was down, 5% on Tuesday. This could be one that maybe you would want to play for just kind of a bounce. You know, like this thing went from 54 down to 48 in the last month or so. You know,
you're saying basically it's a mortgage play here.
Of course.
You know what's interesting is who has not participated. Guy Adami, when you buy a house, what do you put in that house?
Furniture.
People.
Correct. Ethan Allen and Lazy
Children.
Boy, their stocks are both down in the last 6 months.
But that's been a trend for both those stocks for the last decade.
So you got people walking around in homes with no furniture.
I mean, that's just more an indictment on no, I'm not looking to cast aspersions on the Lazy Boy crowd, but it's been a bad.
By the way, best named company in America.
Lazy Boy.
They're the only one with guts.
Which brings back to Restoration Hardware. They're winners and they're losers, and Lazy Boy has been a loser, and Restoration Hardware has been a winner, and I think it will continue to be, Brian.
Yeah, and so getting into that theme, how about Sherwin-Williams, which I think has been also very much tethered to the housing market, Williams-Sonoma, which is kind of like Restoration Hardware at one point was getting torpedoed until these guys went more digital, got into loyalty, learned to manage their inventory, and this has been one of the great plays. Roughly 18 times next year, doesn't look terribly expensive.
But hold on.
I just got like a stay in your lane, dude.
No, but wait. The whole panel right here, we're not just saying that this one piece of housing data means that there's like another leg here. Is that what we're doing here? Because it sounds like we're getting all pulled up on housing right here.
It was a housing trade.
I just want to say.
I don't think anybody's saying go out and buy everything, but we're talking about.
We just kind of went around the horn and said buy everything related to housing.
And Fast Money is right to focus on a number today that was such an outlier in terms of its strength. This is the best number we've seen in over a decade. In fact, I think the point you might be making is that at a time when markets look crazy frothy.
Yeah.
This is the kind of a number that gets you back closer to the go-go days of the housing market where both of these things were harbingers of some bad stuff to come. How am I doing?
Dan, to your point, too, think about permits, and permits missed pretty substantially today, and this can be a volatile data set. So think about the next couple of months. You might have a little bit of a give back on the housing starts.
Yeah, and my question was, I think to your point also, which is just because they're building homes, maybe it doesn't mean it's a great economy. We don't know if these homes are going to sit empty.
Well, listen,
if they're going to be sold, it may be a negative down the road.
Here's a little news flash. It's not a great economy. The Q4 GDP is tracking below 2%. What did we have in 2019? We had 3 rate cuts, and we had the Fed expand their balance sheet by $500 billion. So if that's what it takes to get a housing number like this, 12 years after the biggest financial crisis in 100 years, I'm not so certain we want to look at a number like that and say, all right, get it all in there. I mean, that's kind of my point.
One small point here, as much as that was a crazy number to the upside, housing starts in terms of their average over the last 20 years are still below the 20-year average. So the fact that we're catching up, I think, is encouraging. But I think we're all saying there are structural issues within the industry, and this could be more related to that.
Yeah, we should have looked at Avalon Bay or whatever, because multifamily was up, I think, 30% or something like this.